times. I wouldn't say we're in a depression. I'd say things have happened so quick. It hasn't, I mean, it's affecting everyone dramatically right away, but it hasn't turned into like full out depression. It's still kind of the shock and awe stage of what's going on. I think, looking at what happened in the markets, earnings are down. The markets have had this huge rally. I think they could still gain another 5, maybe 6, 7%. But the evaluations now are more out of whack now at the lower value than they were a month and a half ago, because earnings now are worse. The PE ratio has just shot up even higher. So we're paying more now than we were a month and a half ago, and it just doesn't make any sense.
Thanks for watching this RTD interview. Don't forget to pick up your RTD Scary George round. Now enjoy this interview. Welcome to another RTD interview. Today I'm excited to have first-time guest, Mr. Chris Vermeulen, the founder and chief strategist at the technicaltraders.com. And today he's joining us to share his thoughts on the markets, the economy, and a variety of other subject matters. So Chris, welcome to RTD Interviews.
Thanks for having me, Mike. Great to be here.
Well, I appreciate you taking time to join us here. As I mentioned before, going live, excited to get your thoughts on, where we're at and how you're navigating these markets, given the circumstances we're all facing in this current time. And so for those that may not know Chris Vermeulen, can you give us a little bit of your background and how you've arrived at this point in your career?
Sure. Yeah. Well, I got into trading when I was really young. I started actually in high school, and I got hooked back in high school. And really, I started trading through college, and I started sharing my trades with a group of people in chat room back in 2000, and it kind of just flourished. And, I've kind of done the whole gauntlet of things, from trading stocks to getting into options, covered calls, and Forex and futures. And I kind of done the whole circle of all the different major asset classes and ways to trade them. And I kind of came to one conclusion, which is my passion, which is I like to trade more or less commodities in the broad market, like the indexes. I like slow, big moving asset classes you can put big money into, ride the tides, versus a lot of individual stocks. It's a lower risk strategy. You don't need a lot of positions because you can have larger position sizes in these asset classes. And I really just grew from there. And I'm a 100% technical analyst. I've gone the fundamental way years ago, and you only have to go through a couple rough times and bear markets to realize the fundamental stuff to me doesn't work. It's delayed. Sometimes it's actually ahead of the ball. Technical analysis, I follow the price 100%. I don't care where price goes. I follow it. And as long as I'm on the right side, I get to ride those trends. So I like technical analysis, weeds out all the noise, and you can just focus on price, because as traders, the only way we make money is if price actually goes in our favor. So who cares about news? Just follow the money, right?
Right.
So that's kind of where I go with my newsletter now. Yeah.
Okay. Well, so I appreciate you for sharing that. And so one of the things that the viewers here at RTD often ask me during different segments or whatnot, and they ask a lot of my guests, is that most people, unless you actually have a skill set in being able to trade and read the markets and follow the price and things of that nature, you're one of those investors that buy and hold for the long term. And, one of my concerns, or a lot of people's concerns, is that, the idea of investing has shifted majorly over the last 10, 15 years, especially now that, monetary and fiscal policy has played a major role in the markets these days. And so at this current point, we're dealing with a global situation, and central banks and governments are responding differently. So how does that impact your ability to look at the charts, knowing that I'm assuming a lot of that's artificial, not real price discovery, or give me, how do you look at the charts nowadays?
Right. So, I mean, as an investor and a trader, I focus on 3 core timeframes, because you've got the investor, you've got the active trader, and then you've kind of got a really short-term momentum style trading, right? So I kind of break the markets up into 3 clumps, and I provide trading signals for all 3 of those, because in reality, if somebody wants to make the most amount of money, you've got to take advantage of all price timeframes. And looking as an investor, this is a big time that I'm really trying to help everyone see what's going on, because investing is the easiest. It's long-term. You get a trade every 1 to 10 years. And if you're on the right side of it, you can make a fortune. So right now is a huge turning point for investors. If you're, a couch potato investor who really doesn't know much about the markets, this is actually a point in time where you need to take the initiative, learn a little bit about what's going on, because you do not want to be on the wrong side of this market if it goes south. And you're going to wipe out, 10 years or 8 or 5 years of gains in really only a couple months. We've already seen that, but I think there's potentially a lot more downside to come. So right now I'm really pushing my investing signals, because the last time we had a bear market, I turned 27. I was able to retire after one bear market. There's a ton of money that can be made, and it's happening all over again. And if you're on the right side as an investor, you don't need to be a trader. You just need to profit from falling prices. You need to go to the asset classes that should shine, which are more or less precious metals and gold miners. And so it's really a big time in everyone's life. You really only get 2 or 3 of these opportunities in the stock market in your whole lifetime, generally, to take advantage of them. And this is that point. We're in no man's land in the stock market. Everything is on the verge of potentially breaking, and certain assets on the verge of rallying to crazy, ridiculous values, which are great for metals. So yeah, it's a big turning point for investors right now if they know what to do.
Right. Now, one of the things a lot of people, commentators, mention about uncertainty in the future. And so this current, I think, was, we have all-time highs not long ago, but then followed by a substantial dip in the equities markets. And so at this current moment, do you see further gains, or can it be a major correction? You have a lot of people out there saying it could be, severe in nature. And then also people are labeling this current environment as a depression. And so I'm assuming that's different, time frames as well to consider along the way, wouldn't you say?
Yeah, there's a lot there. I mean, I've never lived through a depression, so I don't even really know what that'll feel like. I mean, I think as seniors, I have kind of been through that. And so I can imagine it's terrible, terrible times. I wouldn't say we're in a depression. I'd say things have happened so quick. It's affecting everyone dramatically right away, but it hasn't turned into like full out depression. It's still kind of the shock and awe stage of what's going on. I think, looking at what happened in the markets, earnings are down. The markets have had this huge rally. I think they could still gain another 5, maybe 6, 7%. But the evaluations now are more out of whack now at the lower value than they were a month and a half ago, because earnings now are worse. The PE ratio has just shot up even higher. So we're paying more now than we were a month and a half ago, and it just doesn't make any sense. And I mean, the market climbs that wall of worry. That's what it's been doing for 10 years. So you can't fight the trend, but I do feel as though the momentum is going to shift, and we're going to start to see that actually rotate. I think we're going a lot lower with the equities markets. And you just got to be prepared and ready to move to cash or bonds or some type of safe haven play that should be able to weather that storm when it comes.
Yeah. Now, as far as the equity markets, do you focus primarily here in the U.S., or do you pretty much comb the globe looking for opportunities, or in this current environment, given we're all in the same boat in a sense, is it the same philosophy and strategies everywhere, you think?
Yeah, because I follow the major indexes, mostly I just follow the U.S. indexes. Really, all the markets almost move together. I mean, when the tide's going up, almost all boats go up, and when the tide goes down. So I always look forward in the morning into what the futures have done in the overseas markets, and they're usually a little bit ahead of us. And then in the morning, we catch up in the U.S. here. So really, if you can time the U.S. markets, you can like the indexes, you can pretty much time most other asset classes. And my focus is on the SP 500. If I know what the SP 500 is doing, and then I look at the relationship to gold or bonds or certain hot sectors, I can get a really good feel of where I should move the capital. So as long as you know where the major money is going in the indexes, you know whether to be in it, out of it, find a hot pocket. I mean, right now we're getting into a bit more of a trader's market until we get a bear market signal potentially in 4, 5, 12 weeks from now. I mean, after that, you'd have to move to cash or bonds and move into safe havens like precious metals. That should go ballistic eventually, but I mean, this infinity printing is just, it's crazy.
Thanks for watching this interview. If you're enjoying content like this, feel free to become a part of the RTD community by becoming a member via Patreon. All it takes is a monthly contribution of about $5 a month for more great content such as this. Just scroll down beneath this video here and click the Patreon link, and then hit this tab right here to become a member of the team. Looking forward to bringing you more great content. Now, let's get back to this interview. Thanks. Yeah, I actually was just reading an article a moment ago about how President Trump just tweeted today about going negative rates. And so he's not satisfied with near zero. He wants negative. And so once again, we've never, to my knowledge, never been in negative territory, like actual nominal negative territory. Now, I'm assuming that will be very bullish for the equities as well, because people looking to get out of more likely cash, probably get in the markets. Or how do you think people will play that?
I don't know. I mean, I've never really studied and figured out the negative interest rate yet. It just is hard to wrap my brain around it still. I think if rates go negative, I mean, it's going to be, I think, a huge positive for precious metals, because you either pay the bank 0.5% to hold your money, which your money's eventually going to lose value because they're printing more of it, or you have a vault hold your metals, and you've got a physical asset that should be holding its value or moving higher, and you're probably going to pay the same interest rate to have it held in a vault. So you might as well go to a physical asset. That's where I think that negative interest rate is really going to change the world. I think it's going to go from, why store fake money in a bank when you can store bricks of value in a vault for roughly the same price.
Yeah, interesting. Now, I'm curious to get your thoughts on certain sectors that might not make it through this current issue, or might not quite sure. So at this current moment, what are some sectors that you're keeping an eye on that has a potential to really rally back, or perhaps may not be around much longer, or how do you play those?
Yeah, I think there's some pretty big opportunities. I mean, the airlines, they're struggling. Transportation's really struggling. It's tough to kind of get a gauge on it still. Right now, the hot pockets are the companies that provide technology that you can use from home and on the fly. You got Microsoft, you got Google, you've got Amazon, everybody's buying online, Netflix, Disney. I mean, all these things, these companies that have online services for group working and virtual kind of offices. Those are obviously, I think, going to thrive. And I really think this was the tipping point for people to work from home. I mean, there's still a lot of corporations. My friend works for a corporation right now. They got 26,000 employees, and they all have to work in an office. It's their policy. Now everyone's been working at home, and their company's just ticking away. So imagine how many offices worldwide they could save by closing the offices and having people work remotely. So this is the tipping point for a lot of companies, millions of workers. And so I think the technology companies are going to actually really start to just go to the moon and take off. Other assets like the financial sector, XLF, ETF, I mean, the banking sector is going to have a tough time. If they go to, as the rates fall, they make less money. They're on the verge. Well, they're always bankrupt anyway, which doesn't even make sense that the banks are bankrupt. But I mean, they're just going to have to get bailed out again. So I really am bearish on the financial sector. It's performing terrible this year. It has barely bounced. And I mean, they're going bankrupt again. So their value is going to drop. They're going to get down to single digit shareholder value. And so I think the financials are a really bad place. Airlines, I think they have a lot more room to fall. I think they're going to go bankrupt. They're going to get bailed out, but the share price is still going to drop to single digit values and just low end. There'll be some good values in time, but yeah.
Interesting. Now, I'm curious to get your thoughts on the mining sector. And so I shared my thoughts recently on the benefits of it. Is that traditionally it's always been a place that always have performed well when there's issues with currencies and governments and whatnot. But then also I the concern of certain governments and certain mining operations in different jurisdictions having some issues with governments wanting to shut down and nationalize things. And so how do you play that? How do you keep that in mind, trading and looking for opportunities in that sector as well?
Right. So I don't follow any of financials or any of that stuff. I just follow strictly price. But looking at the miners, they are coming to life. We're looking at the large cap gold stocks like GDX, ETF. Any large cap gold stock is actually performing really well. They broke into broke out of an 8-year base. They're now in a bull market as of about 2 weeks ago. So that's where the big money is going right now there, and it's moving into gold as well as still the major global safe haven metal. The juniors are still struggling. They've had a nice comeback, but they're still under resistance, and they haven't broken into a bull market yet, but they're close. If they get some legs behind them in a week or two, they could be in a new bull market, and I think they'll be off to the races. So They're not quite there. Silver's not there yet, but silver's got a great looking chart. And once silver breaks out above that $19, $20 range, I mean, it looks like it's going to be a 2010, 2011 rally where it just goes ballistic from, $16 to $48 again. So I think the juniors in silver will play catch up soon. I'm focusing on stocks and sectors that are already in an uptrend or showing signs of a renewed bull market. I'd rather not buy something under resistance. I want to buy the large caps, which are already above and can keep going. And so that's what we did with gold last year. It broke out. It led the way. It still is the leader of this year. And now the large cap gold stocks are coming to play. So now that the large caps are breaking out, that's where hedge funds, mutual funds, financial advisors are going to start seeing the mining stocks as, hey, this sector is actually hot. We should start moving into there. So it's really early. It's only been a week and a half, but over the next month or so, advisors are going to start telling their clients, hey, the best asset right now are the gold mining ETFs or mutual funds. So though there's going to be a huge inflow into miners. And the thing is, if you can get positioned now, once the general masses buy in, when their advisors say, hey, get into the metal sector, those people are going to drive the prices up. And it should be a pretty explosive move.
Interesting. Now, as we draw towards the end of our discussion, I'm curious to get your thoughts on the cryptocurrency space. As from a trading standpoint, is that something you follow as well, or is that something that will be worth considering for those that might be interested in trying to figure out where price discovery might end up falling at?
Yeah, I don't follow it too much. I do cover Bitcoin every now and then, but it's starting to move differently. If you look at Bitcoin over the last couple of months, Bitcoin is actually moving in sync with the SP 500. It's funny how when something gets dumped into the financial system in the States, they get futures after it. It starts to mimic the natural flow of money going in and out of equities. And if you overlay the charts, they're actually very, very similar. Up days for stocks are up for Bitcoin and down days. So it's tough because it's not quite trading as freely as it once was. It used to be like a living, breathing organism with waves of fear and waves of greed, and it was awesome. Mm-hmm. And now it's kind of drifting around a bit more. I find it a little harder to predict and trade. But overall, I mean, it's rallying up, and it still suffered during the market crash. I mean, everybody sold everything. And this crash was pretty serious because it affected everything, because it wasn't just people worrying about losing money. It was actually people worried about losing their lives. We didn't know what this virus was going to turn into. Mm-hmm. It feels like it's getting under control now. But when everybody's scared of losing their life, they don't care what they have as an asset. They just cash out and they just go to stay home with family, preserve your cash, get back to cash. And that's why we saw that, I think, a global crash of every asset class. So digital currencies, if we have another crash, it could follow the stock market down again. And it's tough to say. I don't really have enough experience in the digital currencies to really say going forward.
Understandable. Well, Chris Vermeulen, it's been great having you here on RTD. And for those that may not be familiar with what type of services you offer, you mentioned earlier having different tiers of opportunities for people. Can you give them more information on how they can get in touch with you if need be?
Yep, sure. Right now, I think the most important message for anyone listening is really to be on the right side of the markets as an investor. And so I have a service called the Technical Investor. And it's really just big market trends: when to own the SP 500, when to buy an inverse ETF, when to own a portion of gold or gold miners. It's very slow trades. Trades all last a year to 7-8 years in general, but it puts you on the right side of the market, allows you to avoid and profit from a bear market if we get one. This is the point in everyone's life they need to really focus on the stock market and the retirement fund, because almost everyone has got mutual funds or a 401k. And you don't want to see that value crash. And then I've got one called the Technical Trader, which is a swing trading ETF newsletter. Every morning I put out a 15-minute video and I recap what happened yesterday, what's happening now in pre-market, and what's going to happen today, and how it's going to affect any positions we have. And so we do swing trading of ETFs. And then I've got a financial wealth advisor, which is a slower trading service. And it's more or less just SP 500, just bonds and cash. Very slow, very simple, fewer trades. You're only looking at 5 to 10 trades a year, but we're playing just the natural cycles in the market, the tide, and it's a very easy strategy that almost anyone can follow.
Sounds good. Once again, Chris, it's been great having you here on RTD. Looking forward to having you on in the future and seeing where we're at and hopefully getting a little insight as to what's going up, what's going down, and go from there. But once again, thank you for joining us here on RTD Interviews.
Thanks, Mike. Thanks for having me.